Hey, what's going on? Today is day number 2 of my trading comeback journey. Now, if you missed it, Friday of last week, I took a pretty bad beat. And because of that, I've committed myself to trading with monk-like discipline until I make back all of those lost tendies. And I am pleased to report today I secured $2,000, and I want to break that trade down for you because it was easy peasy lemon squeezy, and I think you'll be able to learn something from it. From there, I want to let you know all the major macroeconomic events of the day. There was a very important data report that is clearly going to have implications in the short and medium term. So I want to break all of that down. And I also want to have a quick chit chat of bitty Bitcoin, which hit a new all-time high today. I also want to share my personal thoughts of why I think it's going higher in the short, medium, and long term. And then to wrap it all up, you're not going to want to miss this. I need to discuss 3 different tickers that need to be on your watch list because 2 of them I just initiated a new swing trade on, so I'll be explaining all of that. And then I also want to let you know about one that I'm already invested in that seems to have the makings of a potential short squeeze. So that's the game plan. And with it all being said, let's rock. By the time the stock market closed today, the official headline was this: Dow jumps more than 200 points, S&P 500 pops 1% for new closing high as Nvidia resurges. Now, obviously, there's a lot to unpack there, but before we do that, let me break down how I handled the situation. Daily DGen report plus 2,000. Today, as I alluded to, was an easy trading day. Just past 10 a.m., Piper, my cat who created the trading system for me and allows me to use it, at 10:08 in the morning said, hey, I'm bullish with 4 out of 5 confidence, suggested a SPY put credit spread, a Q put credit spread, and ended up both hitting. Now, for me personally, I ended up trading it through SPX. And as you can see here, 25 put credit spreads, sold it at 90, bought it back at 10, which was a nice 89% return. I had 25 of them, so it was 2K, and it ended up being 1.88K right after all the commissions and whatnot. But you might be wondering, what did I see in the market? What did I not see in the market? What was Piper seeing? Basically, we opened up very strong right after the CPI report. I'll be getting into that. We had a bit of a dip. We hit the downside gap fills, and then from there, you could see it in the options market. Everything started turning to the upside, and man, did we keep ripping. So I was able to lock in the trade around 11 and 12. I mean, I was in the trade for about, actually, we could do the exact time right here. I got in at 9:56, got out at 11:13. So an hour and 15 minutes, an hour and 20 minutes, to make 2K, I'll take that every single day. Sign me up. Speaking of which, actually, if you're curious about put credit spreads, Piper, all that stuff, you can join the Discord. It's free in the link below. It's the Goonie Discord. Use the code Goonie. Your first month will be free, and I'll teach you these advanced trading strategies. You'll learn from other people. You'll get my trades, private lectures, all the cool jazz. It's honestly the coolest trading community on the entire internet, and I'll put my money where my mouth is. That's exactly why the first month is free. If you don't like it, great, no harm, no foul, but I have a strong feeling that you're going to absolutely love it. Now let's move on to the CPI thing that I just mentioned. CPI, Consumer Price Index. It's a very important inflation report. It came out at 8:30 a.m. this morning, an hour before the market opened, and it was hot. It was high. It was not moving in the direction we want it to be. Consumer Price Index rose 0.4% in February and 3.2% from a year ago. The CPI, a broad measure of goods and service costs, increased 0.4% for the month and 3.2% from a year ago. The monthly measure was in line with expectations, while the 12-month reading was slightly higher. That's not what the economists want to hear. That's not what the Fed wants to hear. That's not what the government wants to hear. The core CPI rose 0.4% on the month and was up 3.8% on the year. Both were 0.1 of a percentage point higher than forecast. That's suggestive that maybe what the Fed's been doing isn't quite enough. Now, I don't think this is going to prompt Powell and all of his friends at the FOMC to jack up the Fed fund rate. I think what it's going to do is stall them out for when they actually want to start cutting the Fed fund rate. So right now, inflation coming in higher than expected. I'm sure you watching this don't need to be told that, because the last time you bought groceries, you were probably saying, what in the world's going on? Why is everything a gazillion dollars right now? So I don't think you're surprised, but like I said, our government, the Fed, and everyone else in the market was like, what is going on right here? So that was strange, because if you look at the market early this morning, there was a dip. And then right away, there was an instant recovery. And even though we didn't hit a new all-time high today, we did have the highest closing price in the SPY. So basically, high inflation is good for the market. Low inflation is good for the market. Neutral inflation is good for the market. So apparently, stonks only go up. I guess that's the current phase of stock market trading we're currently in. Now, that might seem a little bit crazy and a little bit upside down, but it is apparently the world we live in. And the other thing that's only allowed to go up, and away is Bitcoin. Just for the point of posterity, Bitcoin currently worth 1.4 trillion, overall 2.7 trillion. That's the value of the entire crypto industry. But I also want to let you know, currently trading at 71.2K, but the new all-time high, at least as of Tuesday, March the 12th, is just over 73,000. You might be thinking to yourself, why has it been ripping so much? Why does it just keep going up, and away? And the answer is as basic as supply and demand. When you have this many assets under management and it just keeps growing and growing and growing, well, there's not that much supply. In fact, the demand is outpacing the daily supply by 12 to 1. So when demand keeps going up and supply is not helping that much, the crossover point, the equilibrium is price, it is literally forced to the upside. And obviously, as there's this much FOMO and fervor and excitement for digital gold, well, demand isn't showing any signs of slowing down. And if you ask me, I don't think there's even going to be a hint of demand slowing down until we get to about mid-April, which is the halving. If you don't know what the halving is, give it a quick Google search. I have some videos on it myself, but basically it's when the reward for all the proof of work miners, it's just going to get cut in half. So that means the new supply is going to drop even more, which actually brings up a really interesting concept. Bitcoin has 6 months until ETF liquidity crisis. Bitcoin ETFs are sucking up the BTC available for purchase, and the tipping point supply dynamics will come this year. I don't want to blow anyone's mind, but it's just going to cause the price to go even more haywire. Bitcoin faces a sell-side liquidity crisis by September if institutional inflows continue. So what I was just showing you right here, these are all the inflows to all those approved spot Bitcoin ETFs. You know, we have Fidelity, we have BlackRock, we have ARK, it just goes on and on and on. Well, as the money's going into there, they have to go out and buy Bitcoin. Well, they're buying Bitcoin from someone. There's not the most supply. So the fair question is, what happens if there's a sell side? Like if no one's selling it to them, well, they're just going to keep jacking up the prices. It's going to get nuts. Now holding 30 billion, they have become the most successful ETF launch in history. Wall Street has not shown an appetite for anything more ever. It's not even close relative to Bitcoin. The stats surrounding the fervor, not just on the retail side, but on the official institutional Wall Street side for Bitcoin, it breaks every single record ever known. Should the trend continue, however, a new phenomenon could arise where there will not be enough Bitcoin available to meet demand. Once again, this is a classic supply/demand issue. Bears can't win this game until spot Bitcoin ETF inflows stop. At this rate, we'll see a sell-side liquidity crisis within 6 months. And what they're looking at is the fact that all this money just keeps flowing in and in and in. It's many, many billions. I'm not saying millions, I'm saying billions. When the tipping point from ETF demand comes, the analysts forecast that the BTC price impact may be beyond market expectations. Once this sell-side liquidity crisis happens, its next cyclical top may exceed our expectations due to limited sell-side liquidity and thin order book. That last part, thin order book, what does that mean? It means when people buy Bitcoin, they're not selling it. There's no sell-side liquidity. There's very few people willing to sell theirs because everyone else is buying it and holding it. And then when it goes up more, they get more excited. So they buy it and they hold that. So the book is thinning out as we get into these higher prices because everyone's just buying it, they're exciting it, and they're basically diamond handing it. I'm very excited to see how this all plays out. It's almost becoming a game of mass psychology, but that's exactly why in the short, medium, and long term, well, long term is more inflation, the government, the devaluation of our dollar. But in the short and the medium term, this is exactly why I see prices going higher and higher. Speaking of that, the S&P 500 officially had its highest close ever. Not its highest value ever, but its highest close ever. We closed at 516.78, which means year to date it is up 9.45%. And the Q's also within spitting distance, but not technically an all-time high or even an all-time high close, but still looking pretty good, up 9.3% year to date. In the short term, the things that could impact the charts in front of you right now are right here. Wednesday, March the 13th, you need to know that at 10:30 in the morning, crude oil inventory is coming out. So if you're an energy trader, put that on your radar. And then at 1 p.m., we get the results of the 30-year bond auction. So those are the two major things I want to put on your radar for the things happening in the short term. You should also probably know a couple of these other things. Here, you could get this. This is a newsletter I make. It's free. It goes out to you every single weekend. I put all those major macroeconomic events, all the earnings that I think you'll care about. But I just want to let you know the seasonality for Wednesday, March the 13th. Historically, the bulls have won this day 64% of the time over the past 25 years. But when the bears win, especially this one year right here, there was quite the drop off. So a bit of a neutral day. The bulls win more, but when the bears win, they win more handedly. So from a seasonality standpoint, a little bit more of a kind of a choppy-ish type of a day. I also need to let you know about some very interesting developments. You know what's going on with the SPY. You know what's going on with the Qs. You know what's going on with Bitcoin. Things are looking pretty freaking good. There's a couple other things that I'm now, in the very short term, excited to talk about. So I initiated 2 new swing plays today. The first one is on NVIDIA. I got some 925 calls, and you might be thinking, Matt, why in the world do you do that? You're more of a 0DT degen trader. Why did you get swing plays on NVIDIA? Well, NVIDIA, I like the trend, clearly to the upside. Higher highs, higher lows. I just didn't want to chase it. So I needed to wait for my opportunity to strike. And on Friday, we had this massive red bearish engulfing candle. And then on Monday, we had even more red and it dipped into the EMA cloud. So I kept looking for almost this valley formation, and that's exactly what we got today. So if you rewind, this high relative to this one, lower highs, lower lows, and then today we had higher highs, higher lows. So it almost gave us that valley setup, and it was bouncing right off the EMA cloud. So that's exactly why I got into some calls. And fortunately for me, I got in early and it kept ripping. So at this moment in time, I'm up about 68% on the position, and a very similar mantra. That's what I did with Meta. So Meta ripped, gapped up on its earnings, range bound, breakout, fake out, breakout, giving me this valley V setup right here into the cloud, kind of that almost like valley formation, similar situation. So I got some Meta 505 calls, and those are currently up 10%. So those are my new swing plays. And the other play that I've already been in, I'm holding stock, I don't have any options, is RUM. RUM had a huge explosion, came down, consolidated in the cloud for a little bit, tried to break, couldn't do it, came back down. And then today, I mean, you could see it right here, a very obvious rip to the upside. Now, from the intro, you might be remembering, oh, well, you said something about a potential squeeze. RUM is it. As of today, 18.22% short interest. That's high. Utilization practically max out. This can only go up to 100%, and it's at 99.3, and it's a bit of a lower float stock. So to me, it has some of the makings of some special stuff. Obviously, I'm not playing options, nothing in the short term. In fact, I'm already in RUM because I like it as an investment. I'm excited about where this thing is going to go 1-2 decades down the line, but I just want to put it on your radar because we have an interesting technical development. The short numbers related to the stock are interesting, and if we can get this break and hold above 836, who knows how exciting things might be. So I'm paying attention to RUM, I'm paying attention to Meta, I'm paying attention to NVIDIA, all in just like the short term of where's this swing trade going to go. RUM, I do like as an investment. Obviously, Bitcoin, I do like as an investment. And obviously, I'm still degenerately trading SPY every single day. So let's see if we could keep this journey, this rebound, monk-like discipline journey of trading to get all those tendies back going. That's what I have for you today. I hope you enjoyed it. I appreciate all your time. I'll catch you in the next one. Peace out.